Hey everyone, and welcome back to The Explainer. Today we are unpacking a really fascinating shift in timing and infrastructure. We're putting together an objective, data-driven investment guide tailored specifically for you first-time buyers out there who are trying to navigate the 2026 NCR real estate market. So, grab your notebooks because the map of wealth creation in this region is literally being redrawn right now, and today's playbook is going to show you exactly how and where. Okay, let's dive straight into this, because this quote right here, honestly, it's everything. It represents a massive psychological paradigm shift for first-time buyers in the region. You know, for decades, real estate value was totally dictated by physical distance, like how many miles are you from the city center. But that rule is dead. In 2026, the only currency that matters is time. We aren't measuring commutes in kilometers anymore. We're measuring them in minutes. And as we're about to see, when you change how a market measures distance, you fundamentally change how it values land. Real quick, here is our roadmap for today's explainer. We'll start with the NCR market shift, move on to the RRTS speed multiplier, break down the 50% price arbitrage, discuss lowering investment risks, and wrap up with a first-time buyer verdict. All right, kicking things off with Section 1, the NCR market shift. Let's be real. Established hubs like Noida and Gurgaon, they had pretty much hit a price saturation point in 2026. The barrier to entry for a first-time investor there is just exceptionally high. But here's the silver lining. This saturated pricing is actively pushing price-sensitive buyers and young professionals to look for fresh alternatives. And that alternative is the Northern Corridor, specifically Modinagar. The data is showing us that it's emerging as the absolute new growth goldmine. Moving right along to Section 2, the RRTS speed multiplier. 35 minutes. Guys, that number is an absolute game changer. The fully operational Delhi-Ghaziabad-Meerut RRTS has slashed commute times to the capital down to just 35 minutes. Just think about the implications of that for a second. High-speed rail has effectively integrated Modinagar directly into Delhi's primary economic zone. It's not some distant, faraway suburb anymore. Functionally speaking, when you look at your daily commute, it's practically next door. Now, you might be wondering, what does this actually do to the market? Well, a really interesting concept to wrap your head around here is price contraction. That's just financial jargon for what happens when a 35-minute high-speed train rolls into town. It's this dynamic where peripheral land prices, like out in Modinagar, rapidly shoot up to catch up with core city rates, all because the commute time just fell off a cliff. The time savings directly trigger wealth creation. The physical land obviously didn't move an inch, but the economic access sure did, and land values are forcefully correcting upward to reflect that brand new reality. Which brings us perfectly to Section 3, the 50% price arbitrage. Let's look at the stark contrast in the actual numbers here. Over in Rajnagar Extension, average plot rates have hit roughly 1.20 to 1.40 lakh rupees per square yard. Now, compare that to the Modinagar sector, where average rates are currently hovering between just 55,000 and 70,000 rupees per square yard. So you're looking at a scenario where families can literally leave the congested city, secure a much larger plot, often double the space, for half the price. And they get to do all of that without sacrificing a reasonable daily commute to Delhi. The data here brilliantly illustrates the exact dynamic we're talking about, a roughly 50% valuation gap. In the market, we call this delta the investor's margin. And here's the absolutely crucial takeaway. As local social infrastructure expands in the Modinagar belt, we're talking hospitals, premium retail spaces, cafes, this gap is projected to close, and close fast. And as it closes, early investors are sitting in a prime position to see high double-digit percentage returns on their capital in a remarkably short window. Let's pivot to Section 4, lowering investment risks. I know buying your first property can be stressful, so let's talk safety nets. The absolute golden rule here is legal transparency. If you want a low-risk investment, GDA approval is 100% non-negotiable. Why? Because of these built-in structural guarantees. First up, infrastructure assurance. GDA-approved layouts guarantee you'll have planned roads, proper drainage, electricity, and water supply. Second, loan availability. Leading banks like HDFC provide seamless loan processing for GDA and REAR-approved projects, which massively takes the weight off your upfront capital burden. And third, resale liquidity. Let's face it, legally sound plots are significantly easier to sell in the secondary market. You want to ensure your investment doesn't just stay secure, but remains liquid. On top of that, your risk is further lowered by who is actually moving to the area. Modinagar is going through what we call a hub and spoke migration. Basically, people are moving out from the crowded, expensive core into these fresh peripheral hubs. Combine that migration with the presence of massive educational powerhouses like SRM University and growing local commercial centers, and what do you get? A recipe for constant, never-ending housing demand. For an investor, that translates directly to high rental yields and incredibly low vacancy risks. Finally, let's wrap this up with Section 5, the first-time buyer verdict. It really all boils down to this one singular question. Why wait for the peak? I mean, if the high-speed infrastructure is already active and the legal framework for safe investing is fully in place, you really have to consider the very real cost of sitting on the sidelines and delaying an investment in a transit corridor that's appreciating this rapidly. The source material makes this really powerful historical parallel that I just love. It says, investing in a Modinagar plot today is exactly like investing in Noida Sector 18 20 years ago. Think about the people who bought in Noida 2 decades ago. They were essentially buying into the potential of connectivity, right? But the wild thing about Modinagar today is you don't even have to wait for the potential. The RRTS high-speed train is already running, the GDA and RERA legal frameworks are totally active, and the infrastructure is literally ready right now. To give you a super practical example right from the sources, just look at the strategic proximity of these new developments. Premium, completely GDA-approved plotted townships like Moti City by Techmen are popping up just a 3-minute walk from the RRTS station. Actually, take a second to process that. A 3-minute walk. That kind of extreme transit proximity just accelerates everything. It dramatically elevates the lifestyle for the people living there, and it massively accelerates asset valuation for the investors. Families are already moving in, and the bank loans are ready to go. Which brings us to our final big takeaway for today. The window for those double-digit returns closes precisely as the commute time shrinks and the neighborhood builds up. That 50% price arbitrage we talked about, it's not going to last forever. The entire concept of time versus distance connects directly back to your wallet. So for all you first-time buyers and focused learners out there, I want to leave you with this one provocative thought. Will you act on the margin today, or are you going to end up paying the premium later? Thank you so much for joining me on this explainer, and as always, keep learning.